Hello everyone and welcome to this presentation on one of the most significant financial events in India, the merger between HDFC Bank and HDFC Limited. This merger marks a turning point in the Indian financial sector, which combines two giants to create a more powerful and integrated financial institution. Let's explore the details, strategy, and long-term vision behind this transformation and merger. So first, I would like to introduce the merger. In April 2022, HDFC Bank and HDFC Limited announced their merger under a landmark decision that redefined India's financial landscape. HDFC Limited, the pioneer in Indian housing finance, and HDFC Bank, one of the top private banks in India, decided to combine their strengths. The objective was to provide seamless financial services, improve efficiency, and respond to the growing competition due to the entries of new NBFCs and fintech platforms and regulatory shifts. This presentation will explore their entire journey from rationale and execution to stakeholder impact and what the future holds. Now, talking about their historical backgrounds, HDFC Limited was established in 1977 and has been instrumental in promoting house ownership across India, whether it is urban or semi-urban areas, or now they have started in the rural areas too. It expanded into real estate funding, insurance, and asset management. HDFC Bank began its operation in 1994 following India's financial liberation. It quickly became a market leader in retail and digital banking. Over the decades, both companies have grew significantly, and by 2022, the idea of combining their expertise made strategic sense as now they want to be a leader in the financial sector. The merger officially concluded in July 2023, creating a powerhouse with a broader reach and stronger capabilities. Now let's talk about why this merger was made. The main strategic reason was the consolidation of both companies' strengths. HDFC Limited had deep expertise in mortgage lending and is now combined with HDFC Bank vast infrastructure and retail reach now. There are also clear synergies between these two companies as they both are cross-selling financial products to a much better asset liability match. Thanks to the bank's access to low-cost funds. Additionally, regulatory pressure and the growing need for scale made this merger both timely and necessary in the evolving financial landscape. Now, what was the merger process? The merger process was a complex, but it was executed efficiently. It began with the official announcement in April 2022, which was followed by a series of regulatory approvals from the RBI, SEBI, and the Competition Commission of India and the National Law Tribunal. By the second quarter of 2023, stakeholder, shareholder, and legal approvals were secured, and the merger took effect on July 1st, 2023. This shows the commitment of both institutions to follow due process while maximizing the disruption. Now, let's look at how this impacted various stakeholders. Shareholders of HDFC Limited received 42 shares of HDFC Bank for every 25 shares they held. This resulted in a massive combined market capitalization exceeding 14 lakh crores. For employees, the merger opened a new growth opportunities and roles across the large organization. Customers are now benefit with unlimited financial solutions from home loans to banking services under one roof. Competitors, meanwhile, are under pressure to match the scale efficiency, which could lead to more innovation and further consolidation in the sector. Financially, the merger was is protected to generate major benefits. In financial year 2020, the combined profit after tax of both companies was over rupees 53,000 crore. Additionally, the expected cost synergies of rupees 10,000 crore are over the next 3 years, and the fact that 70% of the HDFC Limited customers didn't previously bank with HDFC Bank shows immense cross-selling potential. However, there are many challenges which remain. IT systems need alignment, cultures need to be merged, and regulatory compliance is an ongoing task. But with dedicated integrated integration teams and this managed strategies in place, these centers are being efficiently managed by the entities. The future for the merged entities look promising. Their strategic goals are clear: become a one-stop financial services leader, expand into Tier 2 and Tier 3 cities, and continue investing in digital banking. Global expansion is also on the cards as the merged entity is now in a stronger position to compete internationally. To conclude, This merger is a landmark decision in the Indian financial history. It combines legacy, scale, and technology to serve the evolving needs of India's population and economy. As the new HDFC moves forwards, it sets a new benchmarks for banking excellence, customer service, and sustainable and financial growth. And thank you.